the next thing that we're going to be doing is reviewing and reconciling our balance sheet. One of the things that we always talk about here at Fourlane is that if your balance sheet is correct, your financials are correct, right? So if there's nothing hiding in your balance sheet, then your P&L is right. Now, on the P&L, they might not be in the right buckets per se, right? We might have put it in other expenses instead of cost of goods sold, but the bottom line number is correct if the balance sheet is correct, because the two tie out to each other, right? So when we come in and we start to review our balance sheet, the first thing that we want to do is make sure that we're looking at the correct period, so through the previous month generally. And of course, we'll go through, I usually start at the very top, we'll go through and we'll reconcile the checking account. So we make sure that the bank is reconciled, and then potentially what we'll do is we'll go in and look at the checking report and see any unclear transactions, right? So I would go into my previous reconciliation report, look at any unclear transactions and see if there are any transactions that I need to write off potentially, see if there's any duplicate transactions in there, right? So it's not just reconciling the bank account. That is not enough. You have to go back and look at the report and see what is incorrect in there. So that would be for the bank account. So we go bank account, it's reconciled. Yes, I'm going to review the unclear transactions up to July 31st, because that's all I care about. If it's posted in September of 2023, I'll catch it in September. Then I go through and look at the AR aging report. So with these ones, what you want to do is you want to look at the subledger reports. So I would be coming in here into my reports, and I would be running the accounts receivable aging summary report, and again, just doing a review, right? So I want to make sure first and foremost, whenever I look at these reports, that it is for the same period. So the very first thing we do is we look at the balance sheet. It says 495752, and then I look at the AR aging, and it says 495752. If you ever, every accounting staff person makes that mistake where they come in, because in QuickBooks, 98% of the time, your accounts receivable aging and your accounts payable aging are going to tie to the balance sheet, right? Because QuickBooks is different than a lot of other softwares in that it doesn't have true subledgers. QuickBooks just has one general ledger. Everything else is just reports based off of one general ledger. So it's very, very difficult to get these two things to not tie out. It does happen though. And everyone, whenever they're used to using QuickBooks, they will go in and they'll be like, oh, balance sheet 4957, and then they will, have the date incorrect at August 10th, and they'll look at it and they'll go, well, this isn't a great example because it still ties out. But they'll go, oh my gosh, they don't tie out. I've got data corruption. What's happening? And your first thing has to be, and it took me a long time to make this my first thing. My first thing has to be, oh, go check the dates. Okay. So make sure we have the dates correct whenever we're looking and reviewing these subledger reports.